Hello and welcome back. Thank you so much for joining me. If you have been using popular third-party payment processors, or in other words, cash apps such as Venmo or PayPal, you may have heard about the new Internal Revenue Service tax rule. In 2022, the tax agency introduced a bill that would require cash apps to report all transactions on the IRS form 1099-K that in total exceed $600 per calendar year. Given that this is such a low threshold, the new proposal received quite a bit of backlash from freelancers, from business owners, and just regular users. And so after a while, it was put on hold until the 2023 tax filing season. But now that this year's tax season is right around the corner, I would like to go ahead and share a quick update with you. We'll talk about the latest developments as well as how they may apply to your individual circumstances, whether you are a business owner or if you're just someone who likes to use cash apps for non-business related transactions. I want to quickly remind you that all tax-related topics and business-related topics are covered in detail on my separate channel available on Rumble and on YouTube. I will link it in the description below for you, and I highly recommend you go ahead and subscribe if you're interested in this type of content. So here's the latest update. The Internal Revenue Service announced that it decided to once again delay the new tax reporting law. Now, the law is delayed, but it is not off the table. The IRS is still working to implement it. The IRS Commissioner Danny Werfel recently said that the IRS spent a lot of time gathering feedback from a variety of stakeholders, and it realized that additional time is needed to implement the tax law. So they are just putting this on pause for now. The IRS referred to 2023 tax season as a transition year, and in addition to the delay, the IRS now says, okay, maybe you were right. Maybe $600 was a bit too low of a threshold, too much too soon, that is. So now the IRS says that the new threshold will still be much lower than the original one. In its official announcement, the IRS said, given the complexity of the new provision, the large number of individual taxpayers affected, and the need for stakeholders to have certainty with enough lead time, the IRS is planning for a threshold of $5,000 for tax year 2024 as part of a phase-in to implement the $600 reporting threshold enacted under the Biden's American Rescue Plan. The IRS decided to effectively ease us into the new, very, very low threshold of $600 by implementing this in-between phase. The agency said there would be an estimated 44 million forms 1099-K sent if they were to enact the $600 threshold now, and so they want to avoid dealing with the confusion and questions by effectively taking it one step at a time. Additionally, the IRS will make changes to Form 1040 filed by individual taxpayers in conjunction with implementing the new 1099-K requirements. So you do need to watch out for the changes to your individual tax form 1040 when the new requirements are fully launched. So in a way, this is excellent news. However, the assumption here is that any income should be reported to the IRS based on the tax code, regardless of when this new tax law becomes effective. For this year's taxes, no new reporting requirements are in effect unless you receive over $20,000 and have more than 200 transactions in 2023. So same rules as last year apply. What does this mean for you? Let's say your total freelance or business earnings exceed $600. You were paid through a third-party app such as Venmo, PayPal, Cash App, or Zelle. This means that this year you won't receive IRS Form 1099-K to file with your 2023 tax return. What you will receive, however, and I explain this in great detail on my channel dedicated to taxes and to small business, you will receive Form 1099 NEC. NEC stands for Non-Employee Compensation, and you will receive that from the entity that paid you. That same entity will send a copy of your 1099 NEC directly to the IRS. So the IRS will already know the amount that you effectively earned. You will need to include that amount from your Form 1099 NEC as income earned on your return. So there's a very detailed video that explains how Form 1099 NEC works over on my tax and business channel. You're welcome to watch that video next. All reporting thresholds apply to Form 1099-K this year. So just to make that clear, all reporting thresholds apply to Form 1099-K this year. For example, if you received payments in excess of $20,000 and had 200 or more transactions, you will receive Form 1099-K. This falls under current tax reporting rules. I would like to remind you that when this new reporting tax law does go into effect, it will impact not just freelancers or business owners who use cash apps to receive payments for their goods and services. It may have an impact on other people who choose to use cash apps, because once you hit that new threshold, you may receive Form 1099-K from your cash app, and the IRS will get a copy of it as well, by the way. Even though the new requirement is for business transactions only, there is a very valid concern that third-party payment processors won't be able to effectively distinguish with 100% accuracy and certainty whether a payment is made in course of a trade or business, especially if a transaction is between two non-business cash app accounts. So they will have a very difficult time understanding and reporting business versus personal transactions. And that is something that every single user has to be aware of. I realize that it may be confusing, so let's just take a quick look at the IRS website. I want you to see how the tax agency explains it. Reporting requirements do not apply to personal transactions such as birthday or holiday gifts, sharing the cost of a car ride or meal, or paying a family member or another for a household bill. These payments are not taxable and should not be reported on Form 1099-K. So just like I mentioned, make sure that when you do receive Form 1099-K, it doesn't report any of your personal transactions. However, the casual sale of goods and services, including selling using personal items like clothing, furniture, and other household items for a loss, could generate a Form 1099-K for many people, even if the seller has no tax liability from those sales. The IRS is effectively acknowledging that the implementation of this new threshold may cause multiple errors because it will be extremely difficult for them to distinguish between business versus non-business transactions. However, a taxpayer is ultimately held liable for ensuring that his or her taxes are correct. So likely, whenever this tax law is fully rolled out, it will cause errors, confusion, but taxpayers are going to be ultimately held responsible, held liable for reviewing their Forms 1099-K to ensure that the income reported is accurate. That's what you will be taxed on. I believe that this new tax law will be rolled out in late 2024, just in time for the tax filing season in the spring of 2025. So either way, it is a good idea to get really familiar with tax forms 1099-K and 1099-NEC now. If you need some help, I will upload a series of videos on my tax channel, so please consider subscribing now if you haven't already, so that you don't miss those videos. Hopefully this quick video helped clarify where the IRS stands with respect to the new tax rule. As any information is officially released about this topic, I will upload an update for you, so make sure that you're staying tuned. Thank you for joining me today. Give this video a like, share it with your network, with your friends and family, those people who may be interested to watch this, and subscribe to my channel on Rumble and on YouTube. If you haven't already, make sure that you find me on Substack as well. And I will see you in my new one tomorrow. Have a great rest of your day. Bye for now.